How to beat inflation. What are we being paid for? For the fact that we work and do something useful. When we spend what we earn money, we buy something useful. Usually these are the results of the work of other people. Money is very convenient a way to set the exchange coefficient of utilities. For example, many need to work and do something useful with their work for 10 or even more years in order to receive such utility as housing. But we must remember, money is an abstraction, a public agreement on utility exchange ratios, an arrangement that is constantly changing. For example, as a result increase in labor productivity, the value is constantly falling such usefulness as household appliances and computers, but growing the value of such utilities as food, energy, real estate. Money is very similar to the virtual points that are used in games or social networks, especially after they have become in cash. Every time people come to the store for shopping, a little miracle happens to them, which they do not even notice. They take full a cart of useful and necessary things and leave without giving anything material in return. When they pass through cashier, the very virtual points that were credited to them for doing something useful at their work or because before that they had sold something unnecessary were deducted from their account. In this game, there is a character who constantly blurs this agreement on the cost of utilities. He can credit some participants of the game with these same virtual points for free, just like that, not for what. But nobody canceled the law of conservation of energy. It turns out that everyone who worked and created utility, in some part they worked for free for those who got these points. As a result of such an operation, the value, points, is decreasing, although the exchange coefficients themselves may remain. This character is a state, and it distributes free points to, for example, pensioners. This process is one of the factors occurrence of inflation. This example with points well emphasizes the virtuality of money, but after many generations people grew up in a civilization based on money, they seem real. However, the shares that represent a way of registering shared ownership of truly real assets, many seem virtuality, candy wrappers. Price is what you pay. Value is what you get. W. Buffett. The price is what you pay. The fortunes of oligarchs and billionaires, and just rich people, are valued in dollars, that is, in money. In practice, the share of cash and even deposits in banks is an insignificant share in the total structure of their capital. These people were able to become so because they understand well, often on an intuitive level, the role money in wealth creation and social utility. And what is their wealth, if not money? These are real assets. Factories, newspapers, steamships, companies and enterprises that work every day and create goods and services for people. Same here includes real estate, retail, office, industrial, warehouse, residential. The property itself, as a rule, is already a business. Even renting out an apartment is an example of the simplest, primitive business. After money became paper money, its real value steadily decreased. Decreased regarding what? Relative to the value of real assets. Or more correctly, the cost of real assets grew continuously. Do not think that we are advocating to treat money like garbage. Money is one of the greatest inventions of mankind, but if you want to become richer, you need to understand their nature well. How to pay means they are needed for three main purposes: for the exchange of goods and services, for the exchange of assets, business, companies, real estate, for the exchange of resources, including for the exchange of their labor for goods, services, and assets. It turns out that money revolves around real assets, and not vice versa. In the same way, it may seem that the sun revolves around the earth. Productive assets are at the center of the economic universe and have the ability to increase wealth, including generating cash flow and profit. If you did not inherit something or you did not win the lottery, then your capital at the initial stage consists entirely of human capital. This is your ability to work and earn money. This story was told by a diver who went diving in the area of the islands of Papua New Guinea. There the locals are at the level of the primitive communal system. They use shells instead of money. Someone will say, "Here are stupid, you can go and collect shells." But they are not dumb at all. When they are going to trade in the bazaar, they agree. Chicken 5 shells, fish 3, coconut 1 shell. Senior. Make sure that at the beginning of the trading period, the number of shells strictly corresponded to the amount of goods. Further, they are used for convenience. To make it easier was to change. When the trade is over, everyone leaves the shells in the market and disperses with the right things. Local, although the inhabitants are savages, they understand that shells cannot be eaten. We have a cycle of exchange of usefulness, stretched in time. Because of this, more complex monetary mechanisms. But as a result, many civilized people began to think that money can be eaten. If you do not spend everything on current consumption, then you start to have financial capital. If you keep it in money or even on a bank deposit, then inflation reduces it. In this case, only additional investments can replenish it. In the long run, investing in an efficient business and in real estate can't protect your wealth from inflation. You can become an entrepreneur, but not everyone has this talent. A convenient and technologically advanced way to participate in business is to buy shares traded on the stock exchange. However, there are many stereotypes about the stock market, and the stock market in particular. We won't be here compare the advantages and disadvantages of working with stocks on your own. The main thing to understand is that the stock market is not a casino. Speculators turn it into a casino. But real completely different people earn on the stock market, and not at all through speculation. For example, co-owners of the oil company Lukoil Elekperov and Fedon, together with other shareholders, increased their wealth from $300 million to $35 billion between 1998 and 2022, not thanks to stock speculation, but simply by owning the company. Their capital consists almost entirely of shares. In moments of crisis, when the value of shares decreases, they do not sell their shares in a panic, but on the contrary, buy. These people are much smarter and richer than the thousands of speculators playing with Lukoil shares. They understand the value of owning oil reserves, and therefore they are not saving money, but stocks.